All right. Good morning, everybody. So green on the screen. We got Hong Kong down about 0.5%. So this is still going to hit those China ADRs, BABA, Baidu, JD, PDD, NEO, XPEV, the usual suspects. Kind of pushing out beyond Hong Kong. We got the Dow up just about 0.25%, the S&P below 0.5%. The Russell more than 0.5%, and the call buying that came in yesterday afternoon on the Russell was pretty impressive. And it started way before Powell and the FOMC event. And then the NASDAQ up more than 0.75%. And Europe's doing good this morning too. Japan up the most, more than 2%. So things are looking really good out there this morning. The question is going to be, whether or not we can keep it. We're going to get manufacturing PMI, and we've got some auctions today at 1 o'clock. We're also going to start hearing from the Fed. They all want to come out and try to sound like they are independent thinkers with original thoughts. But at the same time, they need to reinforce the collective message and sing from the same hymn book. So really want to listen close to what the Fed has to say. You can use AI for this. This is something I've been encouraging people to do more, is try to find ways to use AI, whether it's reading articles faster, understanding, earnings better, which is something I love to use AI for myself, or to condense speeches and get the gist of the conversation, right? I mentioned the other day how well the Bank of Japan did at telegraphing that they were going to raise rates for the first time in decades. They did a really good job. The messaging that the U.S. Fed does is really poor. They suck at it, but it is still our job to try to whittle out those little pieces, those little nuggets. So they do telegraph. And we want to see what the collective message is now that we're past the FOMC and we're out of that blackout period. The morning briefing is on YouTube. Yes. Has been for years. I can't say that it always will be. At some point, it's going to go private and you won't be able to get it there. But right now, if you look on YouTube, you'll find it, and it's where the video or all the charts that I use on a day-to-day basis, they're in the video description on YouTube. That's because there's always somebody who lives in California crying about how early the morning briefings are. And I get it. Who wants to get up that early in the morning to catch a morning briefing? So we're going to get this collection of data today. To me, one of the biggest things that I'm watching is the auctions, especially that 10-year tips. I know it's not listed here as very high, but with what's going on in Japan, really interested in our 10-year. Just keep in mind, if you're watching US dollar Japan, you want to really keep your eye on Japan's 10-year bond. It's one of the ways that they were able to move it around the other day while also not really interacting with the Dixie, the dollar index. We are going to start getting some data on job numbers. This is really big. It's one of the things that Powell kept talking about yesterday. He repeatedly touched this part of the conversation over and over and over again about how long we're going to continue to sit at this supposedly mildly restrictive territory above a hypothetical neutral rate. And at what point will we finally cut? and what would force his hand. And one of the things that he kept talking about was any signals coming out of the jobs data. So these aren't really the big job numbers that we're looking for. It's usually non-farm payrolls is the biggest one, but anything to do with jobs, you're going to want to keep your eye on. Jolts, unemployment, just every little bit of it. And it doesn't cost you anything to, pay a little bit of attention. Try to find articles, any sort of conversation that's hitting on that topic. So you can see we're up against the call wall, 53.13. We continued to move to the upside through the Globex yesterday, and we really didn't get much of a move in the kill zone, that time frame from 2 to 4 in the morning. We did get a little bit of a drop down, but we've already recovered. Consider that a little bit of a liquidity gap. It's not a big one, but in the mornings, there's not always a really good setup. So when you get one as easy as that, like the little layup, get a couple of points, it's not too bad. At the moment, we're looking for reciprocation on the VWAP. Basically, just measure how far down we went underneath the VWAP, project that to the upside, and that should give you your upside targets. Of course, you're still going to have to worry about things like the earlier Globex high, but at least you'll have a little bit of a target. Now that we're past the gap close, you got to have something. Just be mindful of that call wall. Volumes are normal. They're not out of line. There's no hedging this morning, so they're not really worried about anything. We've got an MDP, which is a missed daily pivot. And really, this marks 2 days in a row. We had a missed daily pivot yesterday. It's buried underneath this 10-year, so you can't see it. But when I hold my mouse there, it kind of shows up as a purple line underneath that 10. So an MDP only counts the next day. So the one that we have right now, it doesn't count. The one that we had yesterday, it counts today. Now, I don't trade the MDP strategy, missed daily pivot. It's not something that I care to trade, but it's a useful tool for analysis, right? A lot of the signals and strategies that I see out there, I don't trade personally, but I found that a lot of them do make a really nice pieces of analysis. So here's just a regular chart. It's a 15-minute ES, and I've got just your basic floor pivot on there. Nothing else, just so we could kind of see what's going on. This is a daily pivot that I was talking about. It's that purple line. R1, R2, and R3 in red, and S1, S2, S3 in green. So this is that daily pivot that we did not hit, which makes it a missed daily pivot. Statistically, price hits that pivot point, 80% and above. So when you find a day that price didn't hit it, well, you're looking at an unusual situation, right? You're in that 20 percentile. If you want to know more about it, you can find a lot on YouTube for the missed daily pivot. It's not my strategy. I didn't develop it. I don't teach it. We are really close to the call wall, 53.21. When we get this close, you can pretty much look for that as a target. Like we'll gravitate into that level. Obviously, nothing's guaranteed, but they do become almost self-fulfilling prophecies at some point. So at this point, with us being this close to the pivot, I would expect to go ahead and just finish the run up, get into that pivot point. How much farther we get beyond that, if we're going to maintain this bullish posture, which we absolutely could. And it's worth hitting on that for a minute. Yesterday was a big move, obviously. The trap is thinking, oh, well, we had a big move yesterday. There's no way it's going to continue to go today. And I'm going to try to short it every chance I get so I can catch it from the top and run it down. I advise caution in that. Can't tell you how many times we had a bullish day yesterday, continued in the overnight hours, and we saw it continue through the next day as well. And every time people tried to short it, they were just fuel to push it higher, right? Because a short has to buy to close. And they just kept getting squeezed. And so squeezed shorts fueled the fire and just kept pumping us higher and higher and higher and higher. So don't think that you want to short this thing across the tops because it's, quote, gone too far, too fast, and owes us some kind of mean reverting pullback, because it doesn't. We've expanded the profile finally. Yay. It is worth noting where there's some volume structure. We ran through that zone really fast. That was during the event yesterday. And you can see the volume structure, yet we didn't spend any more time there than we did anywhere else in this move up. We can see the difference, right, between the TPO on one side and the volume profile on the other. So now, if and when we do fade to the downside, we want to watch this same zone and see if there's some buyer's remorse there or whatever else it happens to be. That was an area of high volume. It wasn't maybe the highest volume. We'll see that in a minute when we go to the 5. But it's still an area of high volume. And you want to know when we come back into that zone so that you don't try to short it, say, right at the top of the zone, and then we happen to bounce off of it and run the other direction, and you get squished. So there's that same volume structure, just instead of on a 10-day 30-minute, we're on a 5-day 5-minute. It was after that big pullback, so it's not hard to find on this time frame. Should we break our own Globex low? We'll get into that zone. And we really don't come out of it until we get to the value area high. So if you want to carry forward one of the volume lines from yesterday, that's a good one to carry forward, just because it kind of marks out the bottom of that zone. If we break that, we're back into a shallow area. We should fall through relatively easy into that 52.50. We do have a new VPOC, and the one from yesterday that we marked out is still valid. So we're keeping that, and we're just stacking them up now. It's not unusual to get, sets of these things. Got it. All right. So no surprise, we're completely outside the box. There is a generic way to kind of identify a 2 standard deviation. This is not the proper way to do it, but it works, right? It's close enough. So unless you're just, really nerding out and you want the actual 2 standard deviation, this will get you there. This is close enough. So as you can see, I added another green line here. All we did in this math is took the original expected move and added it again. That's not a true 2 standard deviation, but goodness, it's close enough, right? And you can see we're at that second measurement already. We're there. If you know anything about standard deviation and mathematics, you would understand that having a 2 standard deviation means that we're in like the 97th percentile, right? Let's get a better number. Two standard deviation, 95.45%. So I said 97, 95 fits. 95 is better. Let's say it that way. So 95% of the time, we're going to close inside this new box. That would be this box here. So it makes sense that now that we're at the edges of it, that we might peak out and above the level, but that we would come back in again afterwards. All right. It's 5311, which happens to be a cog line, no less. Of course it is, right? It's just that same thing that I say all the time. When your measurements and pivot points line up, then you know you're doing it right. This hypothetical 2 standard deviation landed right on another cog line. Looking at distance from 10, this is the 10-day. We're about 1.34%. So we're between 1.5 and 1.25. But we are right at where we've been for the year on how far from the daily 10 we get before we stop moving. Now, this doesn't necessarily mean we're going to fall. We can hold here without climbing higher, and the 10 would rise up to us. So we would call that a correction in time rather than a correction in price, right? We don't need to fall back. We just need to quit running higher. This does say we're overbought or we're at the edges, and that this is where we would expect price to stop. It doesn't say fall. It just says that price would stop. Right now, we're at more than 4.5% above the 10-week. And if we look back, we can see examples of where we've been higher than this within the last year and a half. But we don't usually stay up there. So we'll peak up above, drop back down again. It would be really shocking to get higher than where we are now and keep it for a long period of time. Again, we don't have to do anything, right? We can just pause and let the 10 come to us. A cog line is center of gravity, COG. It's just an acronym, right? There's so much that goes into a cog line, but just use that word gravity for what it stands for. Price gets near it, it's very likely going to go to it. Volatility tends to dissipate when price gets there, so price will hover around that level. You'll really see all the volume and volatility kind of normalize. And what you want to watch for is to see price leave that cog line. It has to get so far away from it before it can finally break gravity and really get away from it. Once it does, you see all the order flow and volume kick back up again. We can drive away from it, very much like two magnets, right? If you turn it one way, two magnets stick together, turn the other way, and they'll repel each other. It's very similar to a cog line. Price gets close to it, it'll magnetize to it. It'll go to that level. Makes nice targets because we know if we get too close, like gravity, it's just going to suck it in there. If price can break that gravity, it'll often violently move farther away from it. COG. To validate one of those levels takes weeks and weeks of work. And to be honest, I have quit validating those levels a long time ago because there's just so much work involved. Now I just assume that they're a cog line, even though I haven't done the work to validate they are. All the 11s, 32s, and 92s. So ES 5211, 5311, 5411, every 11, every 32, and every 92. Guilty until proven otherwise, as far as I'm concerned. The good thing is, so far, that continues to hold. So it's nice. It saves me months of work. So this morning we've got semiconductors up more than Bitcoin, but they're kind of tossing it back and forth on who's leading. Apple's down. We could see a little bit of pushback in the markets because of this, but Apple's been down quite a bit, right? And that hasn't really stopped anything. So unless we get a combo deal like Apple, Microsoft, and Google, all three down, then I think Apple by itself just isn't really going to shape the market. It's still worth keeping an eye on, especially if we're looking for a continued rally. We're going to want to see Apple at least quit falling and hold the line, and even better, to pop back up. It's getting sued again. This is the third time that the Justice Department has gone after him for this topic. So not really expecting too much on this initial sell-off. We'll see though, right? This is just one more brick in the Bank of Apple saga. So we'll see what it leads to this time. But semiconductors, Bitcoin, precious metals, that move in gold was fantastic. And a lot of things pointing towards gold suggests that it's not done yet either. So really want to correlate. If you're messing around with any of the precious metals, keep your eye on what's going on in Japan. Behind that, we've got the FANGs, biotech, the banks, solar, bonds, uranium, almost everything that we would want. It would almost be easier just to focus on what's not up this morning. The VIX is not up, and and nat gas, right? Yeah, that's to be expected. So this kind of reinforces what I was saying earlier. When you've got every sector and industry that we need on a rally move, like finance and technology and consumer discretionary, if you've got those three sectors that are up, you don't want to short the market. You don't want to try to get cute and, play some flip run to the downside, thinking that we've gone enough and that we're owed some kind of pullback today. We're not. Now, I'm not saying that we can't fall. I want to stress this. Markets can always do whatever they want. They always have, they always will. So we don't want to say it can't fall. But on the other side of that, after this move, you don't want to say that it can't rise either. Because at this point, it can. Now, when it comes to pivot point trading, well, we'll just use this one back here because that was a nice example. There's a one side up, two side down setup right there. The way it works is after you've got the pivot point, remember the pivot is in purple, you get a one side up, that's into R1, resistance 1, and then you get 2 to the downside. This actually gave 3 to the downside, but either way. So 1 up, 2 down. If you get into pivot point trading strategies, this is not uncommon. And the person's pivot has that built in already automatically, and it actually picks the direction that it thinks the market's going to go, and then it will turn off the pivot levels that it doesn't think it needs. At least on Thinkorswim, that's what it does. So just type in the word person, you get person's pivots. These two are also person's indicators, John Person. They're worth looking at if you have never really dug into them. They are supposed to be used all together, but you can pick and choose and just choose one if you wanted to. It has this 1 up, 2 down strategy in it, or 1 down, 2 up. You can do it the other direction too. The reason I mention it is because we've got our pivot point here and we've got 1 up. If we were to shoot to the downside today, 2 down is almost 5,200. That's a heck of a down, right? Now, it doesn't have to go all the way down. We could just go 1 up, 1 down, in which case we'd be looking at 5,250. Notice the pivot points aren't equal. That R line is not the same distance away as that S line. So we do have a lot of pivot points to the downside. If we were to break down, we've got the daily pivot, the lower ADR, then the volatility trigger, the previous week's high, and then the full ADR and the 10-week. That's a lot of stuff down below that we can catch on. And that isn't even taking into considerations any sort of halfback from measuring yesterday's price action. So there's a lot of things to the downside to stop this from really moving down too low, right? Again, it's not that we can't, but it would be a fight the whole way down. Some levels in both directions. So we're still looking for the ADR half because we're closest to it, but we've still got to negotiate with this call wall. Through the day today, you're going to want to look for changes in the call wall, see if they're rolling it up, getting it out of the way. And of course, we're still waiting for the AM founders notes from Spot Gamma to see what they've got to say about the changes in the options levels or the lack of changes. Do you imagine that the Bank of England held steady? My card expires this year. I hate having to deal with that. So nat gas, crude, and the VIX. That's what's down. Semiconductors, Bitcoin, precious metals, pot stocks, gold, gold miners, more pot stocks, uranium, emerging markets, which is interesting that emerging markets is up and China's down. So might want to take a look at those China ADRs after all. Like BABA. Yeah, BABA's turning around a little bit. Look for an inside day breakout on BABA, could get a nice expansion. It's already trying to come up out of that zone, that range. Or, and not really Baidu. EDD also not really looking all that good. JD. Neo's trying, nice compression, but it's got a lot of work to do. If we're going to build like an IX10, it needs more work. And XPEV coming back up into, looks like a high volume level. Oh, week to date, it's anchored VWAP from Monday. Still, with emerging markets up, it's worth keeping your eye on those China ADRs. Could see them start to turn around. You can put that in tandem with something like the KWeb, right? Then KWeb was down this morning, but if we start seeing this turn around and emerging markets turning around, because emerging markets basically China anyways. I don't agree with the fact that they get that distinction. They're not an emerging market anymore, but that's the way it is. And commodities doing good this morning. Looks like we're getting a breakout, but there's not any flow yet. So, this is not an overly liquid product to begin with. Probably going to want to see a little more of this reinforcing first. Then we can look for a continuation here. And I mean, it's got a lot of work to do anyways, right? Just measure for the half back, make sure you're not getting in right underneath the major level. And I'm not seeing copper in my list. I'm going to have to put it in there. But we were doing a lot of talking and looking at copper yesterday. And kind of the takeaway is that there's still a lot of room in copper. I can find my chart. So BHP isn't looking really all that hot, but look at something like Southern Copper Corporation. Big old breakout. Nice continuation pre-market. Now I'm on a weekly, but put that on a daily. Or an ETF, COPX. It's a little cleaner on a weekly or a monthly. We're getting right up into this monthly resistance. If we can get through it, then, maybe third time's a charm. Had a couple chances back there. This is like a proxy play on AI, right? Chips need copper. Kind of a roundabout way of getting to it. There's been a lot of articles out over the last month or two about global supply on copper. I was talking with AI for a couple hours yesterday on different copper companies, copper mines, copper mine production, who's got the greatest reserves, copper recycling, say like transformers and electrical components like that. Purities, is that recycled material good enough for chips? Blah blah blah. It was a learning experience with AI as the assist. So again, kind of giving you guys a little bit of a challenge. If you're not using AI for anything, try to think of something to use AI for, because you might as well get used to using it. I use Copilot. It's a Microsoft AI that is not restricted by time frame. So, I don't get answers like, I don't know. I'm still stuck in last year's data. I hate that answer. So copper's up in the pre-market is kind of what I was getting at. And the copper futures look good. So this is a Fang chart. It's like a homemade one with weights to it. You don't have to use a homemade one with weights. You can just look at the NY Fang. But the NY Fang doesn't move in the pre-market. So if you want a pre-market heads up, you can make your own. You just on Thinkorswim or on TradingView, you can just use the plus sign, Apple plus Microsoft plus Google, Amazon, NVIDIA, blah, blah, blah. And then if you want to, you can divide it. If you don't divide it, you don't have to. But you can put them all together and kind of like make your own ETF. There is tradable products too, NY Fang or FNG up, FNG down. So there's different FANG components out there. But we're up in the FANGs this morning. And this is another check in the box that says we can rally today even higher than where we're opening this morning. So it's another reason for you not to knee-jerk reaction short this market today. IWD, IWF, IWD is also up in the pre-market. This is growth versus value using the Russell. There's a million different ways to measure growth versus value, but this is up as well. And if you were to put an S&P chart underneath this and see the up days on this ratio matches the up days on the S&P, and the down days on this ratio match the down days in the S&P. So it matters, right? And it's not perfect. We can see that yesterday this ratio closed up higher than the previous day's close, but it closed down from where it opened yesterday. So, you know, it is a ratio. It's not an inverse S&P perfect product or a correlated product. But when we're up in this in the pre-market, it gets my attention, especially when we're also up in the FANGs this morning pre-market. That's showing that we've got small caps, we've got mid-size and large caps, we've got technology. We already know we have finance this morning because we've seen KRE. And there's the 3 risk-on sectors that we want to see participation in if we're going to have, quote, one of those days. And we've got it. We got every piece of the ingredients required for one of those days. This is FNG up divided by FNG down. So it's like another ratio chart. FANGs up, which is actually a symbol you can go and look at, FNGU, or FANGs down. Put them in a ratio. When one is stronger than the other, this thing moves. The ups are stronger than the downs. We're gapped up in this morning. It's another check in the box. We've got all the ingredients for a continued rally today. So at what point would we decide that we're not in a rally anymore? We can just use some simple metrics. Getting back below the halfback would kind of put a crimp in the argument that we were going to continue the run. Getting below our own Globex low would also do it. But in between, we could also consider this low from this price shelf back here. If we cut through that, the argument of a rally day gets diminished considerably. And the same thing with this structure back here. If we get below that, the argument for a rally gets diminished. So we've got some downside levels that we can keep an eye on and consider for what we would need to see for a short. There's also the argument of yesterday's price action. So we just want to measure all of yesterday. Easiest way to do that is go to the daily. So the highest point of yesterday, 52.97, breaking below that would put us back inside of yesterday's levels. We already talked about all the volume that was sitting at this point, right above the pivot point. If we get through that and we break this pivot, then we're into the halfback, cut through that. We'll get to the first S1 and through that down to the low of yesterday, level by level. That way there's no argument about, well, we only looked in one direction. I still think the rally is on the table today with everything that we've got so far, and that can change, especially when Europe just did their rate decision and we didn't really get a whole lot of action yet. Remember that Europe closes at 11:30, but we often see 10:30 and 11 o'clock moves, and we've got an auction at 1 o'clock today. So you really want to watch the clock for the influence from Europe to fade off. So the pot stocks that are up this morning, CGC and Cron, ABS, the typical pot stock leaders. Just keep in mind these are penny stocks, right? This is a dangerous space that's had a significant beat down, and it's got a lot of room to go before it starts to heal itself. It's also, as a penny stock, it's event driven. So any news on legislation, things like that can shake it up a little bit. The leader this morning is CGC. They were getting flows yesterday too. A lot of volume was coming in. Really didn't get much out of that volume from yesterday, but there was a lot of volume coming in yesterday. So semiconductors leading the pack goes in with the argument that we've got the NY Fang up. We've got the ratio pairs up. We got the Mag 7 up. And then we got SMH up. Everything is pointing to one of those days. I'll leave you guys with this. You can go to Market Watch, go to Visualize tab. On Thinkorswim, these are just level by level, right? So level 1 is Market Watch. Level 2 is Visualize tab. And then the third piece is change the heat map, set it to the index. Now you can choose any index you want and you can watch as many as you want. These are detachable. You can just load them up more and more. So you can put, the S&P, the NASDAQ, the Dow, the Russell, you can just stack them all side by side and watch the flows through the day. This is an advanced decline line, but it's a little more nuanced than that. It gives you more data than just an advanced decline does. It gives you capital flow. They always say follow the money. So you can see the issues. Issues are companies. This is the S&P 100, and because Google's in there twice, there's 101 names. So in the advancing issues, if we're bullish today, we're going to want this in the high 90s. If it's going to be one of those rising tide lifts all boats kind of day, then we want 95, 97, 99 names. I've got an alpha protocol for 98 and above 99 that I buy options in every name on my list if we hit 98, 99. Creating like a basket the way the algos do. Why not, right? They do it. So you can load up the index watch and keep your eye on the advancing declining issues today. If this is going to be a rising tide scenario with one of those rip your face off rallies, then we need the high numbers, right? And then just keep your eye on the capital, make sure we're not getting some divergence. I'm brought up the S&P, but you could just as easily use the NASDAQ. It kind of makes sense to use the NASDAQ anyways. You know, if it's going to be semiconductors and the FANGs. But of course, you can load both. So there's no reason to pick and choose. Just bring them both up. And that way you don't have to pick and choose. That's what I got for you guys. Be careful, be safe. I'll see you all tomorrow.